On the investment grade side, in terms of corporates, what do you like on the credit quality? What's the best spot to be in when you look at credit quality?
When you look at investment grade, we do think that kind of in that single A and triple B area, so the lower end of investment grade is one of the most attractive places. And within the sector allocation, we still like financials. Financials have done quite well over the last couple of years. They've now finally gotten to where we expected them to get, which was trading back through below industrial credits. And we think that will continue. So we think they'll continue to perform reasonably well because a lot of the changes that have gone on from a regulatory standpoint have all been supportive of credit quality with increased capital levels and quality of capital and greater liquidity requirements. That's all helped the credit quality. So we still think that that's a reasonable place to try to find some additional income versus those investors that might be sitting in cash, earning zero, or sitting in treasuries where, again, we think that's a relatively overvalued asset class and could generate some negative returns over the next few quarters for investors.
And is there anything beyond financials in particular, sector-wise, that you guys like?
Yeah, we still like some of what we would call kind of the more economically sensitive sectors of the market because while our expectation is not that growth will surprise in terms of a dramatic upside, we do think we'll see continued kind of solid 2.5% to 3% growth for the U.S. And in that environment, we think some of the more economically sensitive sectors should continue to outperform the more conservative areas of the market.
We certainly at the last Fed meeting and at Janet Yellen's news conference heard that inflation's not a problem, but do you have any tips at all?
We don't in our kind of broader multi-sector portfolio. So right now, because we don't think that inflation is a near-term 6, 12, 18-month problem, there are some seeds of potential trouble, well down the road. So at the moment, we think tips are maybe fairly valued at best, but not really attractively priced. So not using them where we have flexibility to invest in other areas of the market.